I recently sold my whole position in Metastock for 500% gains since I started buying 2 years ago. I also sold my BABA position for 100% gains since I started buying a year ago. With some of those gains, I bought PayPal stock, which reminds me in a way of these stocks. People say PayPal is a dead company. However, their revenue has grown from $9 billion to 32 in the past decade. Last quarter, they reported 7% revenue growth compared to last year. Total payment volume is at an all-time high of 1.7 trillion. They own Venmo, which has 95 million active users in the US and grew by 20% last quarter. And they own Braintree, which is their business-to-business segment. Moreover, they are growing both in the US and internationally. This is why analysts are still projecting revenue growth. They are expecting PayPal to reach $33 billion this year and grow to 43 by 2029. Regarding profit, their net income has grown from $1 billion to almost 5, and they have even more free cash flow, currently at $5.5 billion. Analysts are also expecting good profit growth. They are expecting PayPal to make $5.45 per share this year and reach $9.23 per share in 2029. If you assign a 15p to the company then, it would make it a $138 stock, meaning 122% returns from current levels. I agree with this profit outlook because PayPal has great margins. Gross margin is 41%, profit margin 14%, and free cash flow margin 16%. And they are also buying back a ton of shares lately because management also believe the stock is cheap. And this is very positive for investors as you own more of the company and your stock returns will increase. Then, in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $70 per share, middle 98, and high 134. And because the stock is trading at around $62 per share, this means that if my low assumptions occur, you would get 12.5% annual return on your money, middle 19%, and high 25.5%, which are amazing results. As far as my assumptions, I believe they are conservative, as I have PayPal growing revenue between 4 and 8% annually over the next 7 years, averaging a profit margin and free cash flow margin between 14 and 18%. I assume the PM price to free cash flow at the end of the 7 years of 14, 16, and 18, and I didn't even assume any share buybacks. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, PayPal is trading at a price to free cash flow of 10. It's cheapest in a decade. And they also have a good balance sheet with $10 billion in cash and 12 in debt. The only risk that I see is competition, as there are a lot of companies in the fintech space. However, I believe the risk-reward is extremely attractive and the market has overreacted. Lastly, if you want a discount on stockanalysis.com, the best place for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about PayPal stock in the comments and I'll see you in the next one.